But the investment market continues to be driven by the very strong underlying occupational market, and that's really an expression of the expansion of supply chains as well as the reconfiguration, not just the pure play e-commerce channel, but omni-channel, as well as pure end users and a very vibrant 3PL market. So that underlying occupational strength is really producing very good take-up. There is a response from the developer community with rising new completions, but in all markets where we see rising new completions, so we see rising take-up, and vacancy is coming down across the board. So as a result, the future looks very secure for as far as our crystal ball allows. I think in terms of geographies in Europe, then we can divide really along the basis of the percentage of e-commerce penetration relative to total sales. So in the West we have the UK approaching 20%, and in Southern Europe we're down in the sort of 3 to 5% for Spain and Italy. So it's really interesting to note the perfect correlation between markets that have seen rising rents and which are the exact same markets as those which have the greatest amount of e-commerce penetration. So when we look, for example, at Spain, we shouldn't really be talking about rental growth. What we've seen is a prolonged period of rental recovery. Now, only now have rents just surpassed their prior peak. So coming off a very low e-commerce basis, the prognosis looks very strong for rental growth, driven by occupational demand, but further compounded by rising land values and rising construction costs, set against a development community who's really solving for total returns, more so on the income side of the equation than simply taking continued cap rate compression.